Top 20 Junior Accountant Interview Questions and Answers. Preparing for a junior accountant interview requires a solid understanding of accounting principles, practical skills, and the ability to handle real-world scenarios. The following questions and answers cover key concepts like financial statements, bookkeeping, and situational problem-solving, offering concise insights to demonstrate competence and professionalism. These responses aim to equip candidates with clear, effective answers to showcase their knowledge and readiness for an accounting role. 1. What are the main financial statements and what do they represent? The main financial statements are the balance sheet, income statement, and cash flow statement. The balance sheet shows a company's assets, liabilities, and equity at a point in time. The income statement reports revenue, expenses, and profit over a period. The cash flow statement tracks cash inflows and outflows from operating, investing, and financing activities, reflecting the company's liquidity and financial health. 2. Can you explain the difference between accounts payable and accounts receivable? Accounts payable represents money a company owes to suppliers for goods or services purchased on credit, recorded as a liability. Accounts receivable is money owed to the company by customers for goods or services sold on credit, recorded as an asset. Payable reflects obligations to pay, while receivable indicates expected cash inflows, both critical for managing cash flow and liquidity. 3. What is double-entry bookkeeping? Double-entry bookkeeping is an accounting method where every transaction affects at least two accounts, with equal debits and credits. This ensures the accounting equation, assets equals liabilities plus equity, remains balanced. For example, purchasing equipment increases assets, debit, and decreases cash or increases liabilities, credit. It enhances accuracy, reduces errors, and provides a complete view of financial transactions. 4. What's the difference between accrual accounting and cash accounting? Accrual accounting recognizes revenue and expenses when earned or incurred, regardless of cash flow, providing a more accurate financial picture. Cash accounting records transactions only when cash changes hands, simpler but less comprehensive. For example, accrual records sales when invoiced, while cash records when paid. Accrual is required for larger businesses under GAAP, while cash suits smaller entities. 5. How do you record a journal entry for a fixed asset purchase? To record a fixed asset purchase, debit the asset account, e.g., equipment, to increase its value and credit cash or accounts payable to reflect payment or liability. For example, buying equipment for $10,000 cash. Debit equipment $10,000. Credit cash $10,000. If purchased on credit, credit accounts payable instead. This ensures accurate tracking of assets and liabilities. 6. What are adjusting entries? Can you give an example? Adjusting entries update accounts at period end to reflect accurate financials under accrual accounting. They adjust revenues, expenses, or balances not yet recorded. Example: recording accrued rent expense of $1,000. Debit rent expense $1,000. Credit accounts payable $1,000. This ensures expenses are recognized in the period incurred, aligning with the matching principle for accurate financial reporting. 7. How do you handle bank reconciliations? Bank reconciliations compare a company's cash records to bank statements to ensure accuracy. Steps include matching transactions, identifying discrepancies, e.g., outstanding checks, deposits in transit, adjusting for bank fees or interest, and updating records. For example, deduct unrecorded bank fees from the cash account. Regular reconciliations prevent errors, detect fraud, and ensure accurate financial reporting. 8. What is depreciation, and how is it recorded in accounting? Depreciation allocates a fixed asset's cost over its useful life, reflecting wear and tear. It's recorded by debiting depreciation expense, income statement, and crediting accumulated depreciation, balance sheet. For example, a $10,000 machine with a 5-year life using straight-line depreciation. Debit depreciation expense $2,000, credit accumulated depreciation $2,000 annually. This matches costs with revenue generated. 9. Can you explain the concept of matching principle? The matching principle in accrual accounting requires expenses to be recorded in the same period as the revenues they help generate, ensuring accurate profit reporting. For example, if a sale occurs in December, related expenses, e.g., commissions, are recorded in December, even if paid later. This principle enhances financial statement accuracy and aligns costs with benefits. 10. What software are you familiar with for accounting and bookkeeping? I'm familiar with popular accounting software like QuickBooks, Xero, Sage, and FreshBooks, used for bookkeeping, financial reporting, and reconciliations. Additionally, I understand ERP systems like NetSuite and Microsoft Dynamics for integrated financial management. Proficiency includes generating reports, managing transactions, and automating tasks, ensuring efficiency and compliance with accounting standards in various business environments. 11. Describe a time you identified and corrected an accounting error. Once, I noticed a $5,000 expense was recorded twice due to a data entry error, inflating expenses. I reviewed transaction logs, confirmed the duplication, and prepared a correcting journal entry. Debit accounts payable $5,000, credit expense $5,000. I informed the team, updated records, and implemented a double-check process to prevent future errors, ensuring accurate financial reporting. 12. How do you prioritize tasks when handling multiple deadlines? When facing multiple deadlines, I assess tasks by urgency and impact, using tools like Trello to organize and track progress. For example, I prioritized a tax filing deadline over routine bookkeeping by allocating specific hours and delegating smaller tasks. Regular communication with stakeholders ensured alignment, and I met all deadlines by focusing on high-priority items first while maintaining quality. 13. What steps do you take to ensure accuracy in your work? To ensure accuracy, I double-check entries, use reconciliation processes, and leverage software like QuickBooks for automated checks. I maintain organized records, follow standardized procedures, and review work before submission. For example, I cross-verified a balance sheet with source documents, catching a $1,000 discrepancy. Regular training on accounting standards also helps me maintain precision in financial reporting. 14. How would you respond if a senior accountant questioned the accuracy of your report? If a senior accountant questions my report's accuracy, I'd listen carefully, review the report with them, and verify data against source documents. For example, I once clarified a misclassified expense by presenting the original invoice, correcting the entry, and discussing preventive measures. I'd maintain professionalism, welcome feedback, and ensure transparency to resolve concerns and improve accuracy. 15. What would you do if you noticed a discrepancy during a reconciliation? If I notice a discrepancy during reconciliation, I compare bank statements with ledger entries, identifying unmatched transactions like outstanding checks or unrecorded fees. For example, a $500 bank fee was missing. I recorded debit bank fees $500, credit cash $500. I'd investigate further, consult with the bank if needed, and update records to ensure accuracy. 16. Why did you choose a career in accounting? I chose accounting for its blend of analytical challenges and stability. I enjoy solving complex financial puzzles and ensuring accuracy, which directly impacts business decisions. My detail-oriented nature thrives in organizing financial data, and I value contributing to organizational success. Continuous learning about regulations and systems keeps me engaged, making accounting a fulfilling career choice. 17. Describe a time when you had to work with a team to meet a deadline. In a year-end audit, our team faced a tight deadline. I coordinated with colleagues to split tasks, focusing on reconciling accounts while others handled reports. We held daily check-ins to track progress, shared resources via Google Drive, and resolved discrepancies collaboratively. By leveraging each member's strengths, we submitted accurate financials on time, strengthening team cohesion. 18. How do you stay organized in a fast-paced environment? In a fast-paced environment, I use tools like Asana to prioritize tasks and set reminders. I maintain a detailed calendar for deadlines and organize digital files systematically. For example, during a busy tax season, I categorize documents by client and task, reducing retrieval time. Regular reviews and clear communication with stakeholders ensure I stay on track and efficient. 19. Tell me about a time when you had to learn a new system or tool quickly. When tasked with learning Xero for a client, I completed online tutorials and practiced in a demo account within 2 days. I collaborated with a colleague for tips, tested key functions like reconciliations, and documented workflows. By the week's end, I processed transactions accurately, ensuring a smooth transition. Quick adaptation and resourcefulness helped meet project deadlines effectively. 20. How do you stay updated with accounting standards and regulations? I stay updated by subscribing to FASB and IFRS newsletters, attending webinars, and taking CPA-led courses on platforms like Coursera. I follow industry blogs and join accounting forums on LinkedIn. For example, I studied recent revenue recognition changes, applying them to client reports. Regular engagement with professional networks ensures I remain compliant and informed on evolving regulations. Mastering junior accountant interview questions builds confidence and showcases expertise in financial principles and problem solving. From handling reconciliations to staying updated on regulations, these responses demonstrate the skills needed to excel in an accounting role. By emphasizing accuracy, adaptability, and teamwork, candidates can effectively highlight their potential to contribute to organizational success, laying a strong foundation for a rewarding career in accounting.